All right, so last week we started the conversation on ICO school fees insurance plan. We're doing that because we know that school fully resumed, but apart from just talking about resumption, it's all about you putting in place something that will be very, very necessary, especially at this very, very crucial time, so that you can also help in providing some fees for your children. And that means you have to plan ahead. But let's bring in someone who knows about this and who can shed more light on this. Joshua Gbadebo is a life underwriter with ICO Insurance and is right here with us in the studios. Joshua, good evening.
Good evening, Victor.
How are you doing?
I'm doing good.
All right. So even though we started that conversation last week, for those who missed it, let's just rewind a bit. So what is the ICO school fees plan all about?
Yeah, so ICO school fees plan is an endowment plan that tends to cater for the future of a child's education. So we are saying that if you want to cater for the future of your child's school, we have this plan to cover the tuition fee. So in a case whereby a customer survives or does not survive, the amount is already certain and it will be used judicially for the purpose
that it was meant for.
Yes.
All right. So is it a case of you saving now for your child to benefit in future?
Yes, absolutely. It's a savings and with an element of getting something higher by that time.
Investment.
Yes.
So savings plus is like investment, right?
Yes.
Both of them. Endowment.
Yes, but the major part is the endowment part with it.
Okay. So how does it work? For those who are just listening to us right now, how does the ICO school fees plan, how does it work? Okay,
so the ICO school fees plan, like I stated earlier, is an endowment plan that tends to cover a customer on debt while the policy is in force. Should there be accidental there should be accidental death, the policy kicks into force. And likewise, so the policy has two major cover: the main cover and the optional cover riders. So for the main cover, it speaks to death and disability, in which the policy kicks into force. And for the optional, we have the waiver of premium on critical illness and maintenance benefits.
Okay, I need you to break this down for our listeners. So the option A, which you talked about, if the parents die or the policyholder dies, the policy continues to work for the child until maturity.
Yes.
Okay, that's the first one. The second one, you said you did say about injuries as well, right?
Yes.
Or perhaps disability.
Yeah, disability.
So if the policyholder is, incapacitated up to a level that he cannot work, is that the way it is?
Yes. So the main cover speaks to disability, the disability based on injuries. For a particular period, the moment is certified and that the customer is incapacitated, the company tends to step in to foot the premiums of the policy as in fit. Yes.
Okay. So even if it's like 4 years into the policy and it's a 10-year duration, you're saying that the policy kicks in and will still pay the premium for the next 6 years?
Yeah, that's where the waiver of premium on disability takes its effect.
Wow. That sounds too good to be true. But how essential is this for parents in terms of investment, parents and guardians?
So the part for the investment is speaking to the plan itself. So what we looked at is that we understand that individual policyholder or parents are the desired school that they want their child to go.
Okay.
And in that regard, they already have an idea of the amount to be paid. So what we design is that yes, you've actually saved this money for a particular period, and the beauty of this plan is that we factor that for a longer duration you tend to pay lesser to get higher, and at the point of payment, if the intensity is spreading in for individual year of payments, it tends to get higher value at the end of the day.
Yes. So if it's going to be 10 years, I'll pay less premium than 5 years?
Yes. So the longer the duration, the lesser the premium.
The premium?
Yes.
Wow. Okay. That's getting much more understandable. But at what point do I begin to do this? Is it to say I plan ahead? Will I say if my child is going to go to secondary school, I need to start paying while he's in primary school?
Yeah. So the flexibility of this product is that a customer can have 3 policy at the same time. That speaks to, because the plan has 3
riders.
Not riders. It speaks to 3 coverage. That is the elementary, the secondary, and the tertiary.
Oh.
So a parent can decide to kickstart them now, depending on the financial capacity of such policyholder, or can tend to do that probably at the end when the elementary kick starts. It can just decide to start savings for the either the secondary school or the tertiary phase.
Okay, so can I do the two? For instance, I mean, my child is just let's say 3 years. He's going to nursery and primary school. Can I begin to think of saving for secondary and university? Can I?
Yes, we can do that. Like, the policy is a 5 years, minimum of 5 years duration, and for a child that is 3 years, we believe that probably at 10 years or 11 years, such child to commence secondary school. So you see, with that can work. Likewise, subsequently or simultaneously for the tertiary institution, such can take probably 15 or 14 years plan, which is going to also cover for that. And remember, the longer the duration, the cheaper the premium.
Wow. Okay. All right. So how is premium determined under this kind of policy?
So the premium is determined based on the age of the customer, the frequency and the duration of the plan.
What does that mean? Put it to I mean, in context for us.
Okay, so the context is the younger the customer, the cheaper the premium. The older the customer, the higher the premium.
Okay, the other one, the longer the duration, the cheaper the premium. Yes. The shorter the duration, the more expensive it becomes. Yes. Now, you're saying the younger the customer,
yes,
the
cheaper the premium.
Cheaper the premium. The older the customer, the more expensive premium you pay.
When you compare it.
How come you guys are discriminating against the old? What's going on?
No, we are not discriminating.
So what does that mean, really? So talk to me. Why is that so?
So we put perspective to we are covering risk based on the endowment, and we're looking that a younger person tend to live longer than someone that is older. Okay. So comparing a customer of 35 years to a customer of 50, based on the statistics of the death ratio of let's put perspective of a male customer into place, we feel that 35 still has a longer years to reach 50, while someone at 50, probability that the person might still live 10 more years or 15 more years is a bit slim.
Okay.
So that's the reason why.
All right. So speak to it now in terms of benefits. So those who are listening to us right now, they're still wondering, what do I do? So what are the benefits that parents, families, guardians can derive from this kind of policy?
So the benefit is that since the policy has taken effect, it means that at the maturity period, the payment which has been, or the sum assured which has been agreed from the onset, will be used judiciously for the coverage of the tuition of the child. And should death occur in the duration of the policy would not stop. Rather, the payment is already certain. The company takes charge of the premium payment, and at maturity, the payment is paid. Now, the beauty part about it is the optional rider that speaks to maintenance benefits. So if a customer or a policyholder should pick interest in the optional rider, which is 12% of the sum assured, should death occur, 12% is payable till maturity.
Okay.
And upon maturity, the actual face value, which is the sum assured, is then used for the tuition of the child.
All right. So you just mentioned the option rider, right?
Yes.
How many kind of riders are attached to this kind of policy?
So there are two. We have the optional rider for critical illness, that is a waiver of premium on critical illness. That is, if the customer is diagnosed of a critical illness and we've verified from the office with our doctor, then the company takes charge of the premium payment. That's why it's called waiver of premium on critical illness.
Okay, waiver of premium.
Yes.
All right. That's one of the riders, right?
Yes. Why the second one is the maintenance benefits that I talked about. It is triggered only at the death of the policyholder.
Oh, maintenance benefit?
Yes, maintenance.
Talk to me. How does it work?
Yeah. So when a customer died in the course of the policy, and we are notified that the customer is dead, and we've confirmed that the customer is dead, then the customer subscribes to this maintenance benefit, it is triggered automatically. It means that 12% of the sum assured, which is the face value, is payable till the maturity of the policy. Remember, the company has taken charge of premium payment.
Right. But they will still be paying 12%
yes,
again.
That 12% will be for the upkeep of the beneficiary.
All this on Nigeria now?
Yes.
Okay. And I'm just thinking aloud. A lot of people want to tap into that, really. If they know that this plan will still guarantee protection even when the man or perhaps the woman is no longer there, in terms of paying the premium. And then we also give them some additionals in terms of the maintenance benefit, which is, like you said, 12%?
Yes, 12%.
Ooh. Okay, that sounds pretty good. All right, so how is it calculated in terms of premium now? I know you've said it's about age, but are we going to be taking into cognizance the amount of fees that is paid out there? So, for instance, I want my son or daughter to go to Verity High School, so to say. I do not know if there's any school like that, and their school fees is like 1 million. Am I going to be paying 1 million as a premium?
No. So the beauty about it, like I stated from the onset, is that there's the flexibility about it. The customer is looking at, okay, I want my child to attend this particular school, and the estimated tuition fee at this particular year, while factoring inflation and the like, should be ₦1 million.
Right.
And this customer is looking at paying this ₦1 million for 6 years. Let's take for instance secondary school.
Yes.
So it means that the face value will be ₦6 million.
Okay.
And the customer also decide that he wants an annuity option. That is, he wants to get the payment annually for 6 years also.
Okay.
So what we've calculated now is that the customer wants a policy that is going to pay the tuition fee for 6 years.
All right.
And probably it might be 10 years. Remember, the longer the duration,
the lesser the premium.
And the age of the customer is also a factor to that.
Okay. So that's the way it works?
Yes. All
right, then. Lots of revelation here. Lagos Traffic Radio, 96.1 FM. I still have with me in the studios Joshua Gbadebo, who is a live underwriter with ICO PLC. And this evening, we're talking ICO school fees plan, which is sounding very, very interesting. We're going to take a short break right now. When we return, we'll still give you more updates, especially that impediment around the Ojuelegba corridor. I hope I'll be able to get some fresh news from there. And then we'll also allow you to join the conversation too. Perhaps you've been wondering if there are ways you can get alternatives in terms of paying your children's school fees. This is an opening. This is an avenue. All right. We'll be waiting to hear from you. That will be on 091 5387 7127. A brief break. We'll be back.
Honestly, I am fed up of my street.
Hey, what's wrong now?
I think my street is jinxed. Over the weekend, my apartment was burgled and the criminals made away with valuables. They even took my son's toy treasure box.
Stable and reliable.
And just this morning, there was a huge fire incident in my neighbor's house and he lost everything. I mean everything.
Wow. Anyway, like I said before, stable and reliable.
What are you saying? Are you mocking me?
Abba, of course not. I just said
obtainable, portable, blah blah blah. I can rhyme too. It doesn't help my situation.
Okay, you remember I had similar experience last year, but thankfully I had signed up to a fire and burglary insurance plan with a stable and reliable partner, ICO Insurance.
Oh, now I get it now. Yeah. But why didn't you tell me all this while now?
When the unexpected happens to your home appliances, ICO provides the insurance cover that makes you worry-less. Get the ICO fire and burglary insurance plan today. Call us on 0700 iContact, that is 0700 2442 668228, or visit www.icoplc.com to learn more. ICO Insurance, your stable friend, yesterday, today, and always.
Lagos Traffic Radio 96.1 FM. Insurance on the Move is the program, and I think I have a caller on the line, right? Let's see if I can bring that in right away. Hello, good evening.
Yeah, hello, good evening.
All right. Is this a regular B?
Yes.
All right, B, where are you calling from?
Ogba as usual.
Ogba as usual. How are you doing?
I'm good.
Okay, I see you're very, very keen and interested. Do you want to take an ICO school fees plan for your children?
Of course, yes.
Okay, go ahead. What's your question?
So I want to find out, what about if you are paying for multiple kids? So how does the plan cover multiple kids?
Oh,
like
okay.
2, 3 kids.
All right, good. Thank you so much for that very pertinent question.
Yeah.
All right. Okay, so Joshua, is it possible? But before I allow you to answer that question quickly, let's get back to the roads. It's still very busy. Those of you coming in from the Eco Bridge end connecting Funshaw Williams, we have an impediment at Ojuelegba inwards Domalong, which is really, really slowing things down. It is very, very slow within that corridor. So that's what you have at this time. Lekki Peninsula, Scheme 1, I understand. Inwards journey towards Ikate is busy as well. From VFS, traffic lights intersection is regulating. We have lots of influx on the main carriageway, but nothing unusual there. So that's just what you have around this time. Joshua, did you get the question from B?
Yes, I got his question.
All right. So can I do one policy for like 3 children?
Yes, you can. And so the beauty about it is, remember, it is per beneficiary, that is per child. And
okay, it's
definitely,
per child.
yes, it is not in all cases that we have triplet or twins at the same time. So definitely there are different ages, and definitely there will be different grade.
Right.
So to that, a customer can have individual one for each child, meeting their individual needs.
But I cannot have one for the 3 of them. It's not possible.
No.
Okay. It has to be 111.
Yes. So the instance is this: you can imagine that the last child, the plan is for his primary kidder. The second child is for secondary, while the first child might be for university. So that's how flexible it is. So you can take it one for each
child
to meet their individual needs.
All right. Then this one says, good evening. Is there a minimum or maximum amount I must contribute every month? You didn't put your name, but thank you so much.
Okay, so for the minimum or maximum, we do not have maximum amount. For the sum assured, we have a minimum value of 1 million naira.
Oh, okay.
And the duration of 5 years, which is the minimum. So for maximum, the capacity you have when you get in touch with us on it will give you a value that it speaks to.
All right. This one says, Mr. Joshua, can both parents contribute jointly to one plan for a child? Goyega is sending this one in from K2.
Yeah, that's huge. That's possible. Basically, because that's an agreement between both partners.
Both parties,
yes.
Right? But there's always a sum you must contribute as a premium.
Yes.
Okay, so that can be done.
Yeah, that can be done. But one thing there that is just going to be one person that will be the policy holder. Both of them can be the policy holder.
Okay. Boyega, I hope you heard that. This one says, good evening, Lagos Traffic Radio. What if I want to pay school fees for 2 or 3 children? How does the plan cover multiple kids? I think this is similar to what B was asking.
Yes.
Dokas Ali is sending this one in. Dokas, thank you.
So it's similar to the question B asked, and like I stated, the flexibility that we know individual child might have individual needs, and that's the reason why we make it easier for a customer that for this individual child, let us know your needs and we'll be able to take cover for it.
Right.
The second child and the third child, or the fourth or fifth.
All right, so let's give a clinical scenario, Joshua. So if Mr. Benson picks up this ICO school fees plan for a 10-year duration, right?
Yes.
With a 6 million naira sum assured.
Okay.
And 18 months into the policy, Mr. Benson passes on. What happens?
Okay, so in this scenario, the first thing is to notify ICO Insurance PLC about the death of the policyholder.
Okay.
And the moment we've been able to verify the death of the policyholder, ICO takes full charge of the premium payment.
From then on?
Yes.
You still have 9 years to go?
Yes.
You guys will take it up?
Yes.
Wow. All right. This one says, Victor, good evening. Please, I am heading to Costain from Owode. How is the traffic flow? Okay. It says, for the school fees plan, how flexible is the plan? Can I increase or reduce my contributions over time? Thanks. Chika, thank you so much. Okay, you're heading to, that's Owode. If you're coming in from the Ikorodu end, it's still good towards the side. But you might have it a little bit clumsy at the major intersections. Maryland, have it a bit clumsy if you're heading towards Funshaw Williams, but no major worries. I think you're still very much safe. It's those coming in from the island that are having a pretty slow at this time. All right, so what's your response to this question?
The flexibility, it has flexibility in the case that there's room for increment and decrement depending on the choice of the customer.
Okay, so you can vary it from year in, year out. Does
yes.
that mean I have to adjust the sum assured too?
Definitely, if you are increasing the premium payable, it's going to affect the
sum assured.
So
that can be adjusted too.
Yes.
Oh, okay. That sounds pretty good. 09153877127. Now, upon maturity, who gets the sum assured? Who are we going to be paying it to?
Yeah, so it is at discretion of the policyholder. Remember, it is for the tuition fee of the child.
Mm-hmm.
So the policyholder can decide that, I want to be getting it or I want you to be paying directly to the
school
of choice. And remember, if it is a lump sum option that is chosen, the one-off payment to be paid. So, for instance, the 6 million will be payable directly to either the school or the policy holder. But if it's an annuity option, now this is the beauty about the annuity option. So, for instance of the 6 million, which is the face value, but because Mr. Benson decided that he wants to get the 6 million for 6 years, which is ‹1 million each. So we are saying that 6 million that will be gotten for 6 years, at the end of the day, will have accrued probably approximately 6.8 or 7 million naira. So that is, instead of ₦1 million per annum, it will be above ₦1 million.
Wow. All right. But Agri Corridor this evening, the flash update says it's very, very busy from customs checkpoint, proceeding through immigrations checkpoint, areas like Jida, and of course the bus stop down to Morogbo Junction, all looking pretty busy. Return journey from Morogbo back to customs checkpoint inwards Ijaniki is also busy. So it's a busy movement. That's what we are finding this evening. 091-5387-7127. So for those who are still thinking or contemplating what they need to do at this very, very crucial time, Joshua, what's your message to them?
So my message to those of you that are still not sure of what to do is to consider the future. Remember, there's one thing we tend to look at, the cost of education 5-6 years ago is no longer the same, and in order to ensure that you do not have to start striving hard to get a huge amount to pay the tuition fee, is by taking up this plan. So you can imagine that, for instance, Mr. Benson, now when he gets to that stage, tuition fee is now 1.2 million per, let's say, per term, per section. Now, and with this plan already, you already have the ₦1 million. And if you remember that, because it chose an annuity option part, the 1 million tends to go higher. So at the end of the day, you might just be looking for maybe 50,000 to balance.
Just to balance.
Unlike someone that didn't plan
at all.
So that's the difference.
So it's a much better option then.
A much better option.
All right. What happens to inflation? Does inflation affect it?
Yes. So there's an element of inflation option for customers. So if you want to put in place that, I believe that there might be an inflation affecting the tuition fee at the end of the day, there's an option for that. Just that the premium will be a bit higher than a customer that is selecting the flat option. All
right. Let's begin to write this all up right now. So for those who want to pick up this policy, how can they do that quickly? So you can visit our website, icoinsuranceplc.com. and you can get quotation, and or you can walk into any of our offices across the nation and to meet our representative, and they are going to provide you every necessary information you need. All right. So just as simple as that, right? Yes, as simple as that. Even as we're running off, I received one question just popping in. Let me see. It says, good evening. I am 60 years old with a 3-year-old daughter. Okay, I'm coming. So good evening, I'm 60 years old with a 3-year-old daughter. So what policies can I put in place to ensure her education and well-being in the event of the unfortunate happening to me? Is there any age cap for these policyholders? Oh, yes. You didn't put your name, but thank you so much. I think I really enjoyed that question. Okay, yeah, so there's an age cap because we have the maximum age at entry to be 60 because the maturity will be 65. Wow. However, you know, we talked about custodian and guardian. Right. So since there is a financial relationship in that aspect, it is not necessarily to be the customer due based on the age factor that will prevent such from opening discovery for that child. Right. The guardian can step in. All right. Quickly, let's round off now because this one is just coming. It says, good evening, Victor and Joshua. In the case of running a school fees policy and I need an emergency fund, can I withdraw some part of my premium? This is coming from Comrade Daniel. Thank you so much, Comrade Daniel. Is that possible? No, it's not possible on this plan because it is to guarantee the future of the child. Let's leave it at that for now. Joshua, it's nice having you in the building. Thank you so much for being here. Same here. Okay, then. So I hope you've been able to pick up one or two things that relates to the education plan. We're talking about the ICO school fees plan. Make sure you go out there to tap into it, and I'm sure your children will never regret it. We have to go. Akan Hussein has produced the program this evening. Maximum shout out going out to Definite Media Concepts for putting all of this together. Next Thursday, 6:30, the program makes a return. But till then, I remain Victor Oteri. Have a splendid evening. Bye.
the sun, through the rain, and a friend you can trust.